Fact number 1. All stock markets are interconnected. Fact number 2. The stock market is completely disconnected from the real economy. Fact number 3. Bailouts have nothing to do with either. You came here for the truth, so let me unveil that for you. Let's talk about this one particular chart, and then I want to show you a whole bunch of others. Let's begin with this. Very important to look at not just one indicator, as many do. There's a lot of people who have a lot of money, their hard-earned savings, relying on the 200-day moving average and maybe the 50-day moving average to determine should they put their money here or should they sell it, should they short it, and all these different activities based on such few criteria, such few indicators. Very silly, if you ask me. But at the Money GPS, I try to bring literally as many as I can find. And you've seen that over the years. Look at this one. The median price/revenue ratio of the S&P 500. According to this, right now, at this time, we are looking at a record high in this one indicator, median price to revenue ratio. It is astronomical in this regard. Now you look at the 1.0 rating, which would be here, and imagine if it went to even 1.3 levels, okay? Not even the bottom. Even a 1.5. Where would that bring the stock market right now? We're looking at potentially a 50% drop in the stock market should this value return to a relatively normal level. 50% drop in the stock market. These are the type of things that have gone erratic. They have gone irrational. Yes, there are times when we break new ground in anything. And of course it should, just like the stock market, if it happens to beat its old high, does that mean it's in a bubble? No, not necessarily. It's always done that. This is just what happens. But when you see things become irrational, that's when you have to start questioning it. Is this really logical? Is this something that is sound based on fundamentals? Or is this just something that's waiting to crash? I like this chart a lot. It shows you historically other crashes that have occurred, the S&P 500. Now let's get a couple of these here. You can see the run up. This is, of course, up until the dot-com boom. And you have a 52% crash on the way down. Then you have another run up. This is the housing bubble, financial crisis, 57.7%. And in fact, you can actually see that it moved down even faster. That's what I always want to note, that it tends, every time there's a crash, it tends to crash faster and harder than it did previously. That's very worrisome. And then you have another rise, this one even more dramatic than before. What we can expect if history repeats itself, not if we enter into some sort of crazy territory or anything. We are looking at a very, very dramatic crash on the way down that will drop off like a cliff. And when will it happen? I don't know. I don't know when it's going to happen. But the higher this stock market goes, the harder that crash is going to be. There's going to be a lot of people who are profiting from that, there's no doubt. But if it crashes hard enough, the results of which, of course, there's going to be some government intervention, may mean something very, very serious. I'm worried about it. Very worried about it. I'm not, like some people who are preying on it, thinking, hey, I'm going to make a lot of money on this because I own, this or that. It's worrisome. It's always worrisome because the system is so fragile. Always remember that. But regardless, at some point there's going to be a significant crash. Will this be the big one? Will this be the game changer? I don't know that. But at some point, this has to end. This one here, it could just drop by 50%, and that's it. That's not that bad, comparison to what we've seen historically. A 50% drop, it would hurt. The government would certainly intervene. There would be some major changes happening. Companies would go bankrupt. But it's possible to recover from that. But what happens if we see a Great Depression level drop nearly 90%? Then we're in for something major. When the crash comes, who you gonna call, they said. And, I like to see this. I like to see what they write on these type of charts here. Good chart here. This is talking about, once again, here, no bubble here. They always expect it to go much further than it does. And what happens? It just simply crashes. Again, the housing bubble, the financial crisis. Again, a crash. Showing you, actually more accurately, the drop that occurred during the financial crisis. It just shows you more and more steep. It's quicker every time. And the launch of the robo-advisors, what we could expect here, even a more dramatic rise, I would say almost exponential in its rise of the stock market. And we can expect, when this thing drops off, I expect it to be a near straight line downward, at least for a period of time until the intervention occurs. I don't even know what it's going to look like. It's going to be something the likes of which we have never seen. And that's just, I'm not guessing on that. I'm just saying, just based on history. You pull these charts back. This one only goes back to 1990. But when you pull these charts back, I've seen the ones that go back hundreds of years and really followed them in closely, stared at them. I mean, I've seen countless books in the Austrian economics textbooks that I've read. And you're looking through these things and they just show you the charts and charts. And I've stared at these things for basically hours, to be honest with you, just looking at it, looking at the shapes of them and trying to sort of expand that into what we see today using these little more technical analysis, which ultimately I don't like to base things on. But when you use those shapes, it's just interesting to see. That's all. You don't want to base everything you have on that. It's interesting to see. That's all. All right. Federal student loans outstanding. We seem to have a little problem. It's expanding, and then it just goes insane. It just hockey sticks up practically. I mean, this rise, it's not normal. Okay, this is something that has to, at some point, it has to pop. Either they stop giving out the student loans, or they're going to bail it out, or something's going to have to give. Because you have $1 trillion in student loans. You cannot afford this. It's just a fact. It's just a fact. It's not fear-mongering, okay? Silly people who say this kind of silliness. Anyway. This is real assets versus financial assets. And they put in brackets here the relative price. Okay. They make different points along the way. And all I wanted to note here is at the end. When you see a point at which people, they don't own any real assets. When you talk to people in the finance industry, they'll tell you, I bought some gold because I'm worried about the financial system. They haven't bought physical gold, I assure you, in most cases anyway. They bought gold stocks. They bought gold mining. They've bought ETFs of gold. And perhaps that is better than some other things that they could purchase, but it's not gold. Okay, that's what you need to understand. And then they get into the business of real estate. I'm big in real estate, all right? You need to own real estate. You need to have that security. What do you own? Well, I own a real estate investment trust, REIT, REITs. Oh, so you don't actually own real estate? Well, no, I only own paper real estate. Oh, gotcha. Nobody owns real assets anymore. And just to go back to that for a second, there is another reason, and it's a lack of sophistication, something that I got into in my new book that's coming out very, very shortly. How to actually get into it, even if you don't have much investment, much assets. To what do? I mean, I don't have $1 million. I can't buy a home in Toronto. I can't buy a home in Vancouver and other places. What do? Well, there's ways around that. You don't have to spend $1 million, okay? I assure you, that's not the way this works. That's part of the problem why people are buying real estate investment trusts, because they can just put a small portion in. They don't need to buy a home. Anyway, I want to move on. Bitcoin, after its significant drop with all that situation with China, took a big dip. There's no doubt. After a big run-up, to say the least, off the side of this chart here. Big run-up. And here, another big rise, and it tipped over 1,000. So it's very important to note Bitcoin as it begins to gain more and more attention. I won't go into more detailing and move on. The Bank of Japan. Okay, the Bank of Japan is the prime example. Most financial analysts would agree with this. They are the prime example of how you can print money and that will create a successful economy. Wait a second. Did I just say that? Did I say successful? Oh, I meant absolute failure. That's right. So the yen went higher. Let's pull out the highlighter here. It's fun. By the way, this highlighter, people keep asking me this, and I just want to let you know. Sword Soft Screen Ink. That's what it's called. Okay, people are asking about that. Sword Soft Screen Ink. Free. This is a free version. Anyway, sorry for the segue. Sending the yen higher and roiling government securities. They offered to print more money and that sent their currency higher. Explain that to me. Explain in how any of the fundamentals that makes a single ounce of damn sense. We're going to print money, devalue our currency, and therefore the currency goes higher. Federal Reserve prints $16 trillion, devaluing the currency, destroying the currency. What happens? The dollar starts to rise and rise and rise as time goes on. I mean, there's been ups and downs, but that's what happened over the last few years. How does that make any sense? How does that make a single ounce of damn sense? All right. This was a congressman in a letter to Chair Janet the Felon Yellen. I am writing regarding the Federal Reserve's continued participation in international forums on financial regulation. He's talking about the Financial Stability Board, the Basel Committee on Banking and Supervision, and the International Association of Insurance Supervisors, and on and on. By the way, Basel, let's just, for a moment, just a personal insight, talking with an SVP of a financial institution, who I've mentioned before, and this SVP said to me, "What do you think about Basel? You don't think that's important?" I said, "No, it's absolutely not important." And he laughed at me, literally laughed at me. And then around that time, if you've watched it, Mike Maloney's speech where he talks about oil going down to $10, then they basically tried to kick him off the stage, and he kept going and going and going, and they kept kicking him off. Anyway, you've probably seen that video. If not, Mike Maloney, $10 oil. You can go on, search online. He said, Basel is BS. And I completely agree with that. But this individual in the finance industry believes it is so important. What is Basel? It's basically these recommendations. You have to keep 3% of your reserves and all this stuff. They make all these recommendations, try to make a global policy, basically. It's a supranational entity. We don't need it. It's garbage. It's stupid. Okay? Let's just cut to the chase, okay? I'll give you the tabloid magazine level language because that's what it deserves. Anyway, he basically said, don't do what you're doing. Get out of all these supranational organizations, international organizations. It's a whole bunch of garbage, and it is destroying the policies that America should be first. I get it. I think it's great. I think that is a very good thing. Of course, nothing will be done. He basically said, look, you keep printing money with no oversight, handing it out all over the world. Please stop it. And that absolutely will not happen. They printed $16 trillion, gave it to institutions all over the world. When they asked, who did you give the money to? Tell us. Ben Bernanke said, no. No, he said. He said, no, we're not going to tell you. We're not going to tell you who we gave your money to. Actually, let me step back. It's not Americans' money. It's a Federal Reserve note. So why in the heck would they have to tell you anything? Really, think about that. I mean, you're forced to use that currency. That's the legal tender. But it's not your money. It's the Federal Reserve's. I mean, it's a genius plan. These bastards really created a genius plan. I mean, they got everybody duped. Everybody duped. Fighting with each other over the stupidest things. And meanwhile, we're cutting each other's throats while they're out there laughing it up. Laughing it up. If you found this video informative, please give me a thumbs up. Here's a little entertainment for you. Oh, the lovebirds. Here he is. Ben Bernanke. Let's draw a little. I guess he already has a mustache, but just have a little fun here. And there she is. Isn't she lovely? Janet the Felon Yellen. If you found the video informative, I know you'll find my book, The Money GPS, even more informative. So head over to Amazon where they have a look inside feature that will allow you to flip through the pages of the book and see if you like it. Take care.